Welcome to Fix and Fly, the business podcast, which identifies common business issues for you to watch out for in your day-to-day business life. So tune in every fortnight where we speak to leaders of corporates to SMEs where you can implement their strategies into your business. I'm your host, Larissa Logan from Fixity, where we help turn businesses around. Hi James, welcome to the Fix and Fly podcast.
Thank you for having me.
Can you tell our listeners your journey to becoming the founder of Pilot?
Well, I guess I'm a bit of a serial entrepreneur. I've always sort of worked in sales and marketing or in advertising spaces. And I guess I've noticed over the last few years that there's been a real rise in the creator economy on social media, and I've been quite fascinated with that, simply for the fact that I've always looked at myself as a bit of a jack of all trades, I guess, and trying to understand, how, trends emerge and what things that I'm interested in that I could leverage to capitalize on those trends. And I noticed that sort of younger and younger people are becoming more entrepreneurial as well. And I thought I was a, hustler at 20, right? But these kids are on another level nowadays. And what sort of shocked me though is that they've sort of moved away from what I would have thought to be more traditional channels, where they might be pushing an affiliate link for a fat loss program or something that's legitimate to their profession. They're now seeking just the best or the most volatile ways to make quick money, which, as I said, is a little bit concerning. The thing that I sort of started drilling down into was which of these sectors in the creator economy are growing the fastest. And by far, hands down, head and shoulders above the rest is the finance sector. And I think it's because these, because larger companies are seeing the potential on social media to be able to give young people a platform. These companies like financial, markets or brokerages, for example, are incentivizing younger people to make content that pushes a product that's probably quite risky for that person in general. I found that this was an alarming issue where content creators are becoming quite famous, influential, building a very strong and wide audience, and then pushing people into a platform like a brokerage where there's highly volatile asset classes and instruments without really any knowledge on the product at all or the risks involved, and then being incentivized by those brokerages to do that. So a lot of red flags, and that's where the idea for Pilot came from, I suppose, is because as a young person, you'd want to know who you're following is actually credible, especially as most of the information that young people consume these days is on social media. And I think the statistic is now 70% of new traders, so people that trade, online as a job, are coming from social media.
Wow, that's huge.
It's a big number.
Do you think these young people understand risk that they're taking on themselves by putting this out on social media?
Definitely they understand the risks, but I think also with the same rise of this sort of creator economy, content creation in general has sort of exploded, where there is more sort of radical ideas or radical beliefs being promoted in social media. So it's gone from when you were just taking photos of your cat or your hobbies on the weekend or friends and things like that to now being a source of motivation and inspiration. And a lot of that is very gung-ho. It's very like, deny all the blockages that you might see in your life and just do it anyway. You can achieve whatever you want, which is all great advice. But I think it's being construed in a way that it gives people false confidence, where they feel they could offer advice to people if they're incentivized for doing so, sort of backing up that belief in themselves, but sort of disguised as ego kind of, in a way. And that means that they feel more confident about, pushing a highly risky product or a high risk product, I should say. And therefore they understand the risk, but because it's being promoted in their circle to be acceptable to promote this risk with, confidence, they feel it's okay.
I think coming from a professional services background, it gives me huge anxiety just even hearing you say this, because we're heavily regulated. We've got code of ethics, we've got NZCA rules we have to follow as chartered accountants and also licensed insolvency practitioners. When you give advice, you need to make sure that you have the knowledge to do so in my area. And knowing that there's young kids out there actually providing advice online and other people are following it and potentially making significant losses is, wow, that's crazy.
Yeah, it is crazy. And it's a problem that, it's not just me aware of it, obviously. We're taking, our sort of lead from what regulators are looking at now. So we talk about pilot as a compliance by design model. So the way that we take that guidance is by looking at the International Office of Securities Commissions, which is based in Spain. IOSCO have identified this problem and they call it finfluencers. So these people are influencers on a finance level, right? And so they have put out guidance they issue guidance to about 95% of the world's regulators on, what they should be doing to, combat emerging trends where there's risk. And they've identified to regulators that this is a major issue. So some countries are very progressive in terms of their governance around how they, would combat these issues. Like Australia, for example, have come down quite hard last year, and I think they made about 11 arrests on this exact topic. People who are incentivized elsewhere for issuing, non-regulated financial advice, and causing significant harm across that sector because of it.
Can the general consumer tell from a social media post if the finfluencer is getting paid on the side?
No. Yeah, so platforms are usually the last to move, just because they seem to hold all of the weight, to that whole infrastructure there. So precedents would suggest that it will change, because I think if you cast your memory back about 10 years, you'd notice that on social media you'd be scrolling through your phone and you might see a video that was quite good, and then realizing at the end of it that it was actually an ad and you've been sort of duped. But nowadays there's policy that enforces advertising rules that says this is a sponsored story, or it says this is an ad, and now you're seeing that emerge with AI as well, like this is an AI generated video. We'll expect to see the same thing happen with financial advice. You'll see platforms having to enforce a disclosure or a notice on their videos that this person is a registered financial advisor and that it should be considered with some certain risk assigned to it. So yeah, platforms will definitely move last, but in the meantime, the consumer is looking for a trust infrastructure, something that says, well, this person is trustworthy, and their history shows that they're consistent and back up what they say, and that's what Pilot is doing. So our platform will plug into trading metrics and trading data from not just the retail trader, but passing that data all the way through to the brokerage, so the brokerages can be aware of where these issues are coming from, and then also passing that through to regulators as well, so that they can make better informed decisions about how they can reduce harm as well.
So how would a consumer understand if the finfluencer had the appropriate knowledge to be kind of selling that stock or whatever it was, or sharing that on their profile? How would Pilot help a consumer understand that risk?
So at the core of Pilot is what we call Pilot Score, and Pilot Score is a fairly complex algorithm that looks at trade behaviour. We kind of score it in an anti-hype way, whereas in the current environment, trading is looked at as a successful trader is looked at as someone who's profitable. But we and most financial advisors would agree that we look at trading to be consistent as more relevant to that person's success. So rather than having these massive windfalls where you make one lucky trade out of 100, you'd want to see somebody was consistent over time. So Pilot Score looks at all that trade behaviour and issues a score based on what they're doing with their trading activity, what they're doing with their disclosure hygiene. So, for example, are they disclosing that they're receiving an affiliate link payment from the brokerage that they're promoting? And we combine all of that into a glanceable score. It's kind of similar to how the FICO score emerged in the US. I'm not sure if you're familiar.
No, can you
with
explain
that.
FICO?
So FICO came about because there was a need for payment history data for mortgage lenders. What was happening decades ago is that people would go and apply for a mortgage and not know if this person that was applying for the mortgage was able to pay it back. There was no history on their payment data. So FICO created an aggregation of their payment history from other data points and then put together an overall score that told the lender how likely this person was to repay their mortgage. And that changed the industry because it helped lenders understand very quickly who their customer was and then if they were likely to default or pay on their mortgage. This came about because there was a massive problem, not just for the lenders but also for the consumers, where lenders were actually ignoring their payment history. In fact, there was a scam running in the insurance space in the 50s where insurance companies would inflate the value of properties knowing that the borrower was going to default on the mortgage, and then when the mortgage was sent into a mortgagee sale, they would claim back more than that property was actually worth and then benefit more from that insurance policy. So it really came from two angles. The lenders needed to understand more about their borrowers, and then the insurance companies were obviously leveraging this weak point in the infrastructure. So FICO created this infrastructure where it became policy that all lenders needed to meet this certain minimum criteria if they were lending at this sort of level. So if you wanted to borrow $1 million, you had to have a FICO score of a 700 or something like that. So Pilot looks at this as an example where trust matters. And in the financial space, especially in retail investing, if you're following somebody that's issuing you financial advice, you want to know very quickly that this person is credible. And it might not necessarily be because they've got a qualification, but you also want some more assurance that they've got a history of credibility. And that's what Pilot Score does. It looks at how credible they are over a long period of time. It looks at their disclosure hygiene, as I mentioned. It looks at things like, do they say and do the same thing? So in their social media channels, they might be pushing a particular stock. Do they actually, take that trade and invest in that stock? If they're telling you to buy a highly volatile option call, are they also taking the same trade to back that up? And I think that's, the missing piece is that young people or retail traders in general just don't have this third-party agnostic layer to be able to say, well, he's credible, I'm happy to follow his advice because he has a high Pilot score. Yeah.
I can see there is a huge global problem for Pilot to solve. It is jurisdictional, right? You've got someone in the US who's an influencer pushing a New Zealand consumers watching. Where are the regulators? Where do the lines cross? Who is in control of managing that consumers are getting appropriate advice?
So regulators globally are seeing this as an emerging issue. And the recent forums that I've been at anyway, the number one priority for them is harm reduction from investment scams, and that's how they're looking at the issue in general. However, we challenge most regulators that their numbers are wrong when they classify this as an investment scam, because what's actually happening is people are following investment advice and taking trades on regulated platforms. So the regulation is already there, but not protecting the people that are actually actioning these investments on regulated platforms. So regulators need to be aware that they need to enforce a bit more transparency between those that are coming outside of the regulated space into their regulated space. And the second priority for them, which is cross-border communications. So that's the second part that really we're trying to plug into as well, being able to take our our analytical layer and apply it to an infrastructure that gives all regulators transparency on who somebody is, so that you can follow the trail of the money flow. And if an influencer is being incentivized in Dubai, but is capturing an audience in Australia, these two jurisdictions can easily understand what the behavior of that influencer is.
Yeah, sounds like a large problem. Do you know what the dollar value is of losses globally?
Yeah, total losses we calculate to be about 80 billion every year that are additional losses based on receiving bad advice from an influencer. At the moment, the statistics are pretty stacked against you in terms of retail trading. Most traders lose money. All brokers have a disclosure statement that offers what that loss rate is, and it's higher than 70% in most cases. In some jurisdictions, it's 90%. And so we look at a number there called the drag, which is a number beyond what they would have lost if they hadn't followed an influencer. It's about 80 billion per year, and it's growing.
So what are some top tips that you can give to consumers today around navigating whether the finfluencer has the appropriate skill set to be able to push these financial products?
Talk to a local financial advisor. That's probably the first thing that you should be doing. Social media has changed so much. It's definitely pushing a different rhetoric compared to what you will get from your financial advisor. If I was to walk into a financial advisor's office and say, would you recommend that I put 10,000 on this in the money put on this index fund, he's going to pull his hair out and say, absolutely not. You need to slow down, relax, understand the market better, and make a more conservative decision. 5 years ago, even 10 years ago, if you wanted to place an order like that, you'd have to go to a stockbroker or your financial advisor and ask, how can I place an order like this? But now also the platforms have understood that this creator economy is booming. They've made it much easier for people to get into highly risk exposed trades through platforms like Robinhood, or everything's on your phone, so you can do things quite quickly. If you were wanting to get into the stock market or things like that, definitely talk to somebody who's qualified first.
So what are some of the biggest challenges Pilot has in FY27 in the next financial year?
I think our mission is quite clear, that we are trying to disrupt the entire industry from an infrastructural point of view, which means that we need the buy-in from all sectors. I think it's very easy to identify with the retail sector that there's a massive issue, and I think the regulators also identify that there's a massive issue there. So it's really just making it all come together and building a sort of communication line between us and regulators to be able to advise on what a good infrastructure might look like. That's a slow process, as regulators generally move fairly slowly and conservatively. But we're already seeing a cascading effect from progressive governments who have identified this as a massive issue in their jurisdictions, and so we're getting great response and support from them.
Yeah, well, you make it sound like it's easier said than done, and it just sounds like there's a lot of communication with multiple stakeholders to kind of pull it all together.
Yeah, it's definitely a wider conversation. It's not one particular decision maker. I think when you're building infrastructure, you have to ask a lot of questions. You have to ask all the things that they're focused on today, as well as what's important in 10 years from now. So these sorts of decisions don't just happen overnight. And we feel we've got a very strong first mover advantage because we're kind of ahead of the mandate, meaning that the guidance is only just being issued now. And as I said earlier, we're building compliance by design, meaning that we are pushing this ahead of its policy. So when it does become policy, we have an infrastructure ready to offer, regulators who are, willing to move forward.
And I know you're setting Pilot up for success. You've got really experienced advisory board members. Do you want to let our listeners know how important is it for a startup to have the right people in the right roles?
It's critical because the way that they can open doors for you into new conversations with the relevant people, or even identifying who the relevant people are, is second to none. You can definitely go out and do the cold calling yourself, and I'm no stranger to it, and I think there's a lot of lessons to be learnt in going through that process. But I think the real skill as an entrepreneur is identifying where real talent is, and finding partnerships with people that can really amplify your vision. And the vision is the core thing that brings you two together. So if you both can have an open conversation about your vision and share the same motivation for it, then you can really recruit anybody to your cause. Having a strong team around you is really the only way, I think, that you can accelerate your idea or your vision faster. You can definitely do it by yourself, but with industry experience, with the right connections and network ability, people really make things happen quicker.
And building this type of platform is not cheap. So obviously you need to get investors in the door. What advice would you give to people in a startup, a fintech startup, around negotiating that investor relationship, trying to get investors on board early?
Staying out of Death Valley, as they call it, is the real challenge, especially in a slow-moving sector like financial markets. From a regulator point of view, you're looking at a sales cycle of 4 or 5 years. So it's not really what you budget as a startup, meaning that you have to be quite dynamic in your product offering early. Fortunately, we touch 3 different points in our industry where we can offer a product to our retail investors quite quickly. So we've built risk management tools for those people, and they can use that to better reduce their harm at the time of trading. So that's our sort of source of revenue for today, while we bootstrap into the wider cause of what we're trying to build. But regarding investors, it's the same thing. I think when you look at partnerships, you're really looking for people that understand what your vision is and bring something to the table other than just a check. I think there's definitely a time and place for hard and fast money when you need it, but the people that we are looking to partner with from a capital perspective are people that can offer a broader spotlight on the issue that we're trying to solve. You really need to just speak clearly about your wider vision rather than trying to boil it down to a particular pitch that you think is going to have a good success rate. Just really be passionate about your core belief, and the right person, I think, emerges and then supports you, and then you really have a partner as well as the capital that you need to grow.
So on to some personal questions now. What is the best piece of business advice you have ever been given?
Good question. Best piece of business advice that I've been given is to surround yourself with people that you aspire to be like, and try and identify that at an early age. I was a young entrepreneur at 20, starting my own companies and doing all sorts of crazy things, but I was looking too closely at the people around me as my inspiration, and it was only really later when I discovered that mentorship really does, pay massive dividends in the long run. My mentor in my early days told me to try and find people that you aspire to be like and really pick their brains. I've got a strong belief that all successful people have a few dark secrets, and if you can sort of get close enough to that person to uncover some of these things, it really helps you get ahead. The best piece of advice that I've received would be to find a good mentor and try and extract as much as you can out of them.
I think that's awesome advice. And I think, during the accelerator that we're both on, we've both got a number of mentors through that program, and it's really great to be able to just tap in to those experts where you maybe don't have that skill set. So that's some great advice. Thank you so much for joining me on the Fix and Fly podcast.
My pleasure. Thank you again.
I can't wait to see where Pilot goes, and I just wish you all the best in the future.
Thank you so much.
Thank you so much for watching this episode. If you enjoy the Fix and Fly podcast, make sure you like, comment and subscribe, and share with anyone you think will find this useful. We look forward to seeing you next time.